Good morning, everybody. Hey, welcome to Friday. It's the 23rd of August. Hope you guys have had a great week and are looking forward to a good weekend. I know I am. Hey, we get ready. Hey, football season starts this weekend, so really looking forward to that as FSU gets to play over in Ireland. But again, glad you're with us today as we look at what's happening in the markets yesterday, kind of a down day. Looks like some green ink this morning as we wait for Powell to finish up his speech over in Jackson Hole, Wyoming. So, hey, with that, don't forget that there are so many things in this world you and we have no control over. However, you can take control of your investment portfolio by knowing the amount of risk you have versus the amount of risk you should have in your portfolio. And that's why I developed the core retirement design to help you design that retirement you always dreamed of and to make sure that the risk you have in your portfolio truly matches up with the amount of risk you should and need to have in your portfolio. Give us a call at 863-382-0037 to schedule your core retirement analysis. And with that, we got Dave coming up next.
Everybody's gotten foot loose. That's Kenny Loggins at Light FM. Good morning. I'm at 8:41 here, 19 before 9. Time to check in on Wall Street. And if you looked at the close yesterday, you probably want to jump off a building. Now, this morning, you'll probably want to climb back up on top of it again. Up and down, up and down. Well, we're into a volatile period. What can I say? On the phone with Phillip Statler from Statler Financial Services in downtown Sebring. Boy, yesterday really was El Stinko, Phillip, but looks like we're going to bounce back this morning, doesn't it?
It does, Dave. Yesterday was not a good day. We did lose anywhere from a 0.5% and more, but it looks like we can probably gain that back at least this morning. And I think it probably will hinge on what Mr. Powell has to say this morning out in Jackson Hole.
Yep, they're up at a Tony Resort in Wyoming talking money, and when the central bank head speaks, and he's got other central bank heads in there as well from around the world, it tends to carry an awful lot of weight. Setting the table, Dow was off by 178 yesterday. Standard & Poor's was off by 50. NASDAQ was off by almost a full 300. Some of that was dragged down by the fact that investors got nervous about NVIDIA. Their report isn't out until next week. But if they're already starting to swap it downward, sell it short, and play games with it, I got to wonder what NVIDIA stock's going to be doing for the next 7 days. That having been said, we're bouncing back a little this morning, and I gather they're optimistic that Powell's going to be able to thread the needle, throw a little bit of cold water on the notion of a full 0.5% rate cut, but not so much that it's going to scare the market, right?
Well, I guess. I mean, I'm looking at the futures, and the futures are positive, and they're happy right now. So obviously, we'll see what he does have to say, and how the traders and investors really look at his speech and how they dissect it to determine what the day ends up and what the week ends up like.
And meeting expectations is going to be kind of interesting. I got a new Bloomberg chart out now talking about what investors expect for interest rates from the federal government. And right now, the consensus is they're pretty well expecting us to be down at 4% or below by the end of next year. That would imply a running ton of rate cuts. And I'm just not too terribly sure we're going to get those. So what Powell says could carry a lot of weight, especially given the fact that we're starting to get to a point of borderline irrational exuberance on the interest rates coming out of the Fed.
Well, it is, and like I said, we'll continue to see what the Fed actually does because that'll be more important than what we think they're going to do. Is what do they actually do, and it is. I mean, there's still this balancing act that they're having to do because we are seeing a slowdown in our economy, and so maybe next year is the year we have to really push interest rates down hard in order to bounce off of that floor and hopefully not have some kind of recession next year.
And you know, that job revision report that we both kind of got a little confused with a couple of days ago kind of emphasizes the fact that, yeah, the employment market is slowing down a little faster than I suspect anybody expected it to. I mean, a revision downward of like 1.1 million jobs less than we thought we added over the last year or so. That's got to make Powell and the rest of the central bankers kind of Well, sit up and take notice at the very least. You mentioned that in the Fed minutes on Wednesday afternoon, a couple of the governors were ready and raring to cut rates immediately this month. The consensus was we'll do it in September, and now the question is how much. But given the employment situation, there's that dual mission the Fed has: control inflation without killing employment off. Well, there's some indications that, well, at the very least, we punched employment in the face. We may not have killed it, but it's definitely off from what they thought it was.
Well, it is. And I know that there are layoffs across the board. I mean, we're seeing some that I know are coming here in Highlands County. I know that there's big companies that are laying people off. I mean, we're seeing it weekly now, where we're seeing reports of, a 7 or 10% decline in workforce, laying people off. And so that's just an indication that the economy is slowing down. And so companies are trying their best to keep their earnings where they need to be for their shareholders.
Yeah, and this time around, the layoffs aren't exclusively out in California, where they've got that very generous requirement that they have to give you a 60-day notice for a layoff, which basically allows most folks to find another job so they don't show up on the unemployment rate. But now we're starting to get a little bit more industry and nationwide, so we're going to start seeing those numbers change on the weekly unemployment claims, I have to assume.
I would think we would start to see some of that as well.
One would expect. So anyway, 10 o'clock this morning, we could very well have a seismograph on the indexes because Chairman Powell will be speaking, and just how much cold water he chooses to put on the glass will probably make a pretty substantial difference. I mentioned NVIDIA. It's interesting. The rumors get out that NVIDIA may not be quite as hot as they expected it to, and it was down by, 30% yesterday? Some dumb number like that. Yeah, that went up by 30%. It fell by 4% yesterday. That's just on the rumor mill that they might not be the gangbuster report on the 28th they expected to. NASDAQ is nowhere near a stable market at the moment, is it?
No, it's not. I mean, interest rates play into that. Earnings will play into that. The, industry specific areas will definitely play into that. Those numbers and everybody's wanting an increase in earnings, an increase in revenue. So we'll see if that increase, if they have an increase, is enough to satisfy investors next week.
They're going to be intriguing. Other tidbits going on this morning. I mentioned earlier this week that Ford made some product line changes. Well, a few months ago, a Ford executive called their planned 3-row electric SUV a personal bullet train. Ford decided to announce they were scrapping that. Customers didn't want an electric SUV, and we got our mortgage report out earlier about mortgage applications earlier this week. They continued to fall. Needs to be mentioned, mortgage rates are at the lowest they've been since May of last year. So that's expectation again of interest rate cuts on the Fed, dropping mortgage rates down. Like I said, if Powell disappoints, it could upset a whole bunch of industries, couldn't it?
Oh, it definitely could. Now, we did also yesterday, and no, this would not have been bad news, but the existing home sales came out yesterday at 10, and they were slightly above what they were last month. And as expected, they came in at I think an annual rate of 3.95 million, almost 4 million existing home sales. So that was relatively a good news.
I was going to say, holding their own at the very least. Tail end of earnings season going on. We got one in this community. How did Ross do anyway last quarter? Off-price retail, given difficult economy, jobless, whatnot down the line. I'm assuming that discounters would do pretty well. How were they?
They did. They did well. Now, their revenue came in as expected at $5.25 billion. They did beat earnings by about 9 cents a share. I don't have what the expectation was, but they are trading up today, almost 5.9%.
Cool.
Yep.
One thing works the way you'd expect it to.
That's right. Hey, we have two other earnings reports that have come out this morning that have hit the news wire. Bill.com, that company had stronger than expected fourth quarter results. They came in at 57 cents a share versus 46 cents, and revenue was about 20 million, well, 15 million more than expected. And so they're trading up about 3.2%. And then the last one I have for you is a company called Workday. Now, Workday is like a human resources, human capital type company. They manage human resources for companies, is what they do. And so they had a pretty good quarter as well. They beat on earnings by about 10 cents a share at $1.75. Earnings were just slightly above expectations, but they're getting a nice little bump this morning, up 15% this morning, Dave.
I hate to sound cynical, but a human resources outsourcing firm during a time of layoffs doesn't sound like the growth industry I really want to see growing necessarily. Resetting the table, off day yesterday on Wall Street, up day this morning. How good are we looking 45 minutes before the markets open?
Like we're pretty much a half a point or better across the board. The Dow's up 210. That's just a slightly above a half a percent. The S&P 500 is up almost 7/10 at $37, and the Nasdaq 100 is up a little over 9/10 this morning. It's $178. Russell 2000 is about 6/10 up. On the other side of the coin, we got silver up 1.4%, still below yesterday at $29.44 an ounce. Gold is up 8/10 at $2,537 an ounce, and then crude oil, Dave, it's a huge jump today, up 1.75% to $74.27 a barrel.
That up and down during the day, I think that's about where it was yesterday at this time in the morning, though, wasn't it?
No, it was about $2 less.
Was it all the way down into 72? I'm just happy to see a 7 as the first number. It feels so good compared to the 80s. Looking at the overseas markets, the Asian Rim still has a little mild case of the flu, but the Chinese mainland markets recovered a little bit at 6 a.m. this morning. They were up. Hong Kong still getting a cold off of it. They were off by a bit, meaning the Asian markets on balance about flat. Europe is saying, oh, okay, fine. They had a bad day yesterday. The futures are recovering. European markets are up pretty evenly by about 0.25% halfway through their trading day. It's up and down, and trying to figure out what's going to happen is probably something best left to tea leaves, not your retirement funding. How do I find you to get the risk out of my retirement plans, Phillip?
You're right, Dave. I mean, there's a lot of layoffs happening. There's a lot of people thinking about retirement. Now's a good time to do some planning, and that's why I developed the core retirement design to help people plan and design the retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again on Monday morning, probably talking about Jay Powell right here on Light FM. Fair enough?
Fair enough, buddy. You have a great weekend.
You do the same. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us. Hope your week was well. Have a great weekend and join us again Monday. Until then, have a good one. Bye now.